Yo, what is good, YouTube? We are back with another episode of the Trading Den V2. I think this is episode 10. If you guys are not in the free Discord, go join it. It is the first link down below. This is the most requested video, the turtle soup strategy, right? We are not going to be going over the entry models because that's going to be later in the course. We're specifically going to be going over how to spot turtle soups. Now, the thing is, we're only going to be going over the trades that I have taken this month that have been turtle soups. So you guys can't sit there and say, this is hindsight, you can only do this in hindsight. No, I have taken these specific trades every day this month that have been turtle soups. We are going to be going over them, so you guys can't say that I'm using hindsight, right? If you guys want to see my chart executions, you can go into the Discord, see them for yourself, right? We're going to start off specifically with yesterday, right? We are going to be going over the trade that I took yesterday and how I could see that this was going to be a turtle soup to go short, right? So there's two types of turtle soups. There are two types of turtle soups. Whenever let's say that this is ES, right? This is ES, and this is going to be NQ, right? The first turtle soup is going to be your SMT, right? This is going to be your SMT protected high turtle soup, right? There is two different kinds of turtle soups. This is the first one, the SMT turtle soup, which in my opinion is a lot better and safer than going to the just regular stop run turtle soup strategy, right? The first one is going to be your SMT. This, in my opinion, is the most favorable. Now, the second one is going to just be your normal stop run and then continuation, right? Stop run a low, stop run a high, continue. So that is going to be the second one. Now, going into yesterday, this is how I could figure out, hey, this is going to be a turtle soup to go short, right? So for reference, you have to go watch my using candles as ranges video. I think that's episode 3, but you have to go watch that to understand why I took this trade, right? So right here at 9 a.m., what do we see with this 9 a.m. candle, right? We take both poles of liquidity. We have taken this Friday's high, and we've also taken these lows, dug into this key level, this fair value gap, and then we took the high again. So what does this candle represent? It represents a lower time frame range. So using this candle as our lower time frame range, I wanted to see us either take the low or take the high and then go the opposite way. Now, if we go down to the 15-minute, we can see this range becomes a heck of a lot clearer, right? You can see that we are inside of this low, inside of this high, right? With these candles right here. Now, what do we see with this candle? This is going to be your turtle soup, right? And now on the 5-minute, you can see it even clearer, right? High, low, we're in the middle of that 9 a.m. range. Now, the higher time frame SMT was right here, right? We had this SMT with the ES. So whenever we create that SMT, it's cool to go short, right? I don't know where that just went, but we had an SMT with that high over there. So we create that SMT, this right here, right? This becomes your stop run. This becomes your manipulation, right? Because what are we doing inside of this high and this low? Accumulating, right? We are accumulating shorts, we're accumulating longs. So what do we want to do? We want to be a seller above a high and a buyer below a low. So coming in, as soon as we came above this high, I went down to my lower time frame, found my entry model, and I shorted pretty much high of day, right? I can pull up what I actually got short from. Chart executions, I was short from 833.25. 833.25. So I was short from up here. My stop was up here. My PT was down here, right? Right here was my trade for yesterday. Right here, a 7.3 R. Now, digging a little bit deeper, how did I know it was going to be a soup, right? Candles as ranges. We're inside of this candle's range. If we go above the high, right, this is going to be our manipulation because we are accumulating here, right? Power of 3. Every candle is a new power of 3. Accumulate, manipulate. Turtle soup right here. SMT with that daily level. So there's a bearish SMT giving us even more confirmation. We rotate back down to the bottom of the range, right? So that right there was a great example of a turtle soup strategy, or of the turtle soups that I use. Now, we can go to the 16th. Actually, no, because that wasn't really a turtle soup. So we will go to the 13th. 13th is right here. Okay, so this was actually a really good example. Right here. What do we have down here at this low? We have an SMT. Okay, so we have a higher time frame SMT. If we go to the 1 hour, it's a 1 hour swing low. So what don't we need? We don't need a key level, right? So we don't need a key level since we have this higher time frame SMT. And we still have higher to go because those triple or those quad equal highs are still resting up there. Now, what do we have right here, right? High probability order blocks. Okay, now what do we wait for? 15-minute stop run right here. This is your turtle soup. We actually form an SMT there. So what is that? A protected low. I got long somewhere up here, stop down here at this low. Now I actually let this run pretty high. It actually came within 2 points of filling me. So wherever that is. So right around here was my PT, and then I closed the position right here. So right here, turtle soup, SMT at this low, right? How can you be so sure, right? You're asking me. How can you be so sure that we're not going to run this low? SMT, right? Turtle soup on the higher time frame. This SMT right here. Turtle soup on the lower time frame. SMT here. Go down to the lower time frame, find your entry model, continuation, right? So 13th was a beautiful trade. I actually added to this position, so I was long 3 contracts from somewhere down here all the way up here. Now, the day before, I don't know what this trade was. We can figure it out right now. Load up this. Okay, right here. I actually got long a little bit late, but what do we see throughout here, right? Go to that 4 hour time frame. What do we see right here? 4 hour fair value gap. So this is our key level, this 4 hour fair value gap. Now, what do we see right here, right? We see a stop run, right? Now this is where I say, hey, we come back down and run this low. Why do we do that? There's no SMT on it, right? SMT will confirm a protected high or low. This is not protected. There's no SMT on it. So what do? We rerun this and we form a bullish SMT, right? ES does not take this low out. And then I got long somewhere within here to run these highs. We actually can go down to the 1 minute because there was another SMT, right? So right there, stop run right here. Your entry can be somewhere within here. Don't worry, we'll get into entries. Now, where was my entry? My entry was right here, right? We form another SMT right there, bullish SMT. The high of day is our draw on liquidity. I was long from here, right? Stop was below this low. My PT was all the way up here, right? So right there, we get an immediate run up. Now remember, or notice, every time that I enter, we get a quick distribution to the highs. Why? Because of the SMTs, right? SMTs will give you those quick moves to the draw on liquidity, right? We form this SMT, we get kind of a slow move, but remember, this is during lunch. But what happens when we form an internal SMT turtle soup? Straight distribution, right? So you always want to remember what time of day it is, when you should be executing, right? Remember my kill zones video, right? This isn't a kill zone. So we're not going to get quick price action until we form that internal SMT. So right there was that trade, right? So you guys are seeing how I'm reading these turtle soups, right? Now, let's go to another one, which was the 6th. Let's go to the 6th. Right, taking a short from up here, right, all the way down here, right? So what do we see with this price action? We're forming a power of 3. We have 830 news. What does 830 do? Manipulates us higher, right? Now we form what? SMT up here with these highs. So we have a bearish SMT. Now what do we wait for, right? A swing high on the 15 minute to get stop ran. Why? That's going to confirm your turtle soup, right? We form a 15-minute swing high, stop run it. Now what else do? We create an SMT at this high up here, right? So we formed an SMT right there as well. Bearish SMT right here. And then I entered somewhere within this down close candle, right? PT was right here at 8:30 open. Stop loss was at this high. Why? Because it's protected. It's SMT'd, right? Protected high, straight distribution down, right? That was one of the quickest moves I was a part of. That was really fast. Now, what should I have done? Let it run down here to the power of 3 low, right? That's what I should have done, but I didn't. So, once again, 15-minute swing high, stop ran. SMT at those highs up there. SMT with 9:30 open. That's your turtle soup. All right. Now, if we want to go to the 4 hour, what else do we see, right? Remove all this. What else do we see? This candle is our range, right? We close below this candle's low. This should be the draw on liquidity. The 15-minute, right? High, low. We're accumulating inside of this range. Manipulate higher. Take a swing high. Stop run on the 15-minute. SMT at the high. Straight distribution lower, right? Boom. Now, there was one more that I took this month, the 3rd, right? So the 3rd, 9:30. Let me pull up the picture. I don't think I took one until later in the day. I think it might have been right here. Let me pull up the picture. Yeah, it's right here. So I took this trade right here, right? Draw on liquidity is lower. What did midnight open do? Manipulated higher, right? Midnight open manipulates higher. Draw your standard deviations. 2, 2.5, chop around. -4 is next. Boom. Okay. So, what do we see right here? 15-minute fair value gap, right? We are extremely, extremely bearish on the day, right? So go down to the 5-minute. Pull up ES. What do we see right here? SMT, right? SMT. We have already tapped into a higher time frame key level, the 15-minute chart, right? That 15-minute fair value gap. Go down to the 1-minute so it looks clearer, right? Right here is your SMT. My entry was somewhere right around here. Stop at this high. Why? It's protected, right? Then my PT was, I think I actually got out somewhere within here. I don't think I held this entire time, right? Stop gets moved to break even whenever I actually did take partials at this low, but then I let runners run down there, and then I put my stop loss right around here at break even. I did not get stopped out right here. Then we just chop our way down, and then I got out somewhere around here. But yeah, right there, your turtle soup, right? 15-minute fair value gap. This is your turtle soup on the ES, right? Remember, ES is taken this high, right? So ES has turtle souped this high. That's your turtle soup on the ES. This is your SMT on the NQ. Protected high, right? It is super simple, right? You don't need SMT, but it's so much clearer whenever you get an SMT instead of just your regular old stop run, right? Also, what do we see right here, right? Swing high on the 1-minute, 15-minute fair value gap, right? We're inside of that 15-minute fair value gap. Swing high on the 1-minute, stop run that, boom. Start distributing lower, but we come up one more time, and we probably hold CE of this wick. Tap, oh my gosh, tap CE of that wick, form an SMT, boom, straight down, right? That's your turtle soup on the ES, right? Now, once again, all of these trades I have taken, you can't sit there and say this is hindsight, right? I have caught tops, I have caught bottoms, It is super simple whenever you make it super simple. Higher time frame key level or an SMT, 15-minute stop run, right? I don't sit here on the 1 minute, right? If I was trading today, right? If I was trading today, I know it's really ugly because we have FOMC. I would not have sat here and watched this. I would have been up here. Even though I wouldn't have traded this, I would have been on this 15-minute chart, waiting for this, a stop run of a high, distribute lower, right? That's what I would have been waiting for, right? And if we go to the 1 hour, what do we see? A 1 hour range. Boom. Right here. What do we see? Stop run of the high, straight down to the low. It open, right? Why would I use this candle as my range, right? It took two sides of liquidity, right? We take a high, we take all these lows, right? We don't take this low yet, but we have taken lows on the lower time frame at these lows. It's FOMC. I'm anticipating what? Run of highs, run of lows, run of highs, run of lows, this. Seek and destroy. I'm anticipating this. And if we go down to the 5 minute, you can see that we're taking highs, taking lows, taking highs, and then maybe we get back down here at these lows, but I just kind of would think that we just sit around here, right? I'm not anticipating a straight expansion move either direction, right? So this was the turtle soup video. Every trade you've seen, every trade that you have saw, I have taken personally. So I hope you guys enjoyed the video. I hope that you can read turtle soups, right? Go to your, whenever you get on the charts, do not go to the 1 minute. Wait for the 15 minute to show you a direction. Wait for a 15-minute stop run. Go down to the 1 minute, right? Don't just sit there on the 1 minute and think, this is my stop run, right? Oh, look, going lower, stopped out. Oh, look, going lower for sure, CISD, stopped out, right? Don't sit on the 1 minute. Sit on this 15-minute chart, wait for a swing high, wait for a stop run, boom, right? This is what you, if you would have waited, this is what you would have taken. Boom. Right here's your turtle soup. New 15-minute candle opens up right here. Wait to see if we take the high, right? If we don't take the high and displace lower, then you can take the fair value gap. Wait for us to take the high. Why? Why would we do that? We close above this candle's high. Wait for this candle's high to get taken. Entry here. Boom. Wait for the distribution to these lows, right? Even on an FOMC day, it is following, right? And then this is your internal stop run, right? Because we're in a bearish market maker model. Stop run of a high, enter. Hope you enjoyed the video. I'm going to get out of here. Join the free Discord. Peace.